that Ghana needs a strong and stable banking sector to drive the process of economic transformation, noting that a weak banking system does not help us because it does not help with access to credit and also accounts for the relatively higher lending rates that we have. The Bank of Ghana is mandated by law to promote the safety and soundness and stability of the financial system and to protect the interest of depositors. The Bank of Ghana has been introducing a comprehensive set of reforms with the twin objective of repairing and restructuring the financial sector to ensure that banks are well capitalized and strong to support the fast-growing and transforming Ghanaian economy, and also to ensure that domestically owned banks are further strengthened to participate actively in the economic and social transformation agenda. The asset quality review of banks conducted by the Bank of Ghana in 2015 and updated in 2016 identified a few indigenous banks as vulnerable with inadequate capital, high levels of non-performing loans, and weak corporate governance. In August 2016, the bank closed two of those banks. This is the UT Bank and Capital Bank, and approved the acquisition by GCB Bank of some of their assets and liabilities under a purchase and assumption agreement. Other banks that were more recently licensed in 2016 and also commencing operations in 2017 also began showing signs of distress due to existing vulnerabilities that were not disclosed at the time of their licensing. Efforts by these banks to extricate themselves from financial difficulty have not borne fruit. The situation has rather worsened for these banks. Unibank and Royal Bank were identified during the AQR update exercise in 2016 to be significantly undercapitalized. The two banks subsequently submitted capital restoration plans to the Bank of Ghana. These plans, however, yielded no success in returning the banks to solvency and compliance with prudential requirements. The official administrator appointed for Unibank in March 2018 has found that the bank is beyond rehabilitation. Shareholders, related and connected parties had taken amounts totaling 3.7 billion cedis, which were neither granted through the normal credit delivery process nor reported as part of the bank's loan portfolio. In addition, amounts totaling 1.6 billion had been granted to shareholders, related and connected parties in the form of loans and advances without due process and in breach of relevant provisions of Act 930. Altogether, shareholders, related and connected parties of Unibank had taken out an amount of 5.3 billion cedis, constituting 75% of total assets of the bank. Beige Bank and Construction Bank were each granted provisional licenses in 2016 and launched in 2017. Subsequent investigations conducted by the Bank of Ghana revealed that, similar to the case of Sovereign Bank, both banks obtained their banking licenses under false pretenses using suspicious and non-existent capital, which has resulted in a situation in which their reported capital is inaccessible to them for their operations. In the case of Royal Bank, an on-site examination conducted by the Bank of Ghana on 31st March 2018 revealed a number of irregularities. Its non-performing loans constituted 78.8% of loans granted, owing to poor credit risk and liquidity risk management controls. A number of the bank's transactions, totaling 161.9 million cedis, were entered into with shareholders, related and connected parties, structured to circumvent single obligor limits, conceal related party exposure limits, and overstate the capital position of the bank for the purpose of complying with the capital adequacy requirement. In the case of Sovereign Bank Limited, as part of Bank of Ghana's investigations into the failure of Capital Bank Limited, currently in receivership, it emerged that Sovereign Bank's license was obtained by false pretenses through the use of suspicious and non-existent capital. The bank is insolvent and unable to meet daily liquidity obligations falling due. Liquidity support granted so far to the bank amounts to 21 million as at 31st July 2018. The bank has not been able to publish its audited accounts for December 2017 in violation of Section 90 of Act 930.
Yeah, that's what happened yesterday when the Bank of Ghana revoked the licenses of Unibank, the Royal Bank, Beige Bank, Sovereign Bank, and Construction Bank. So the central bank has granted a universal banking license to a new entity, Consolidated Bank Ghana Limited, established by the government, and they've appointed Mr. Ni Amano Dudu of KPMG as the receiver for the 5 banks. Right, so we have a lot to talk about around this, some great analysis with my colleagues from Joy Business. Let's say good morning to Norvan Akwa-Hayford and Philip Nanfuri. Gentlemen, how nice to see you both.
Nice to see you too.
Pity about the circumstances though, right?
Indeed it is.
I can't wrap my head around this. And of course, as with anything technical, there are a lot of technical terms flying around. Why don't we do a bit of cleaning up first and get to understand some of these terms? I've heard about something called something and assumption.
Purchase and assumption.
Purchase and assumption. Yeah. Some people refer to it as a measure, but it's clearly not
a measure.
So why don't we start to understand some of the terminology around this, and through that get to understand exactly what Bank of Ghana has done.
Okay, so let me start off with the purchase and assumption. And if you read through, even last year when the UT Bank, Capital Bank debacle broke, the Bank of Ghana used that phrase a lot, purchase and assumption. Simple. You purchase the assets and liabilities, but in this case, the good liabilities and the good assets of the bank, and you assume them under your control or under your entity. So last year we had GCB Bank purchasing and assuming the assets and liabilities, the good assets and liabilities of both UT Bank and Capital Bank. Now we have the same arrangement where the Consolidated Bank Ghana, new bank, fresh, has purchased and assumed the good assets and liabilities of the 5 banks you mentioned. Now, a merger comes in where you have a number of entities that are coming together. And let me just chip in here. If you go through financial literature or banking literature, when you talk about mergers and acquisitions, there are some types of mergers. We have the horizontal merger and we have the vertical merger. And let me explain. Horizontal merger. So assuming all the banks in Ghana decide to come together, they are all playing on the same field, which is banking. If it was vertical, then maybe the bank will want to acquire a card company, a card making company, or a check machine making company. So we have the bank sitting here, we have the card company sitting here, we have the check company sitting here, and the bank acquires them. So they play in the same space, but in different categories.
Right.
So that's it. So the merger just coming together of a number of institutions is way different from what we have, what we call the purchase and assumption of these banks.
Right. So no merger here. Let's not be using that expression. It is purchase and assumption of the good assets and liabilities of these 5 banks, which means the bad assets and liabilities, something must be done about them, and that's where the bond comes in, am I right?
5.76 billion Ghana cedis is going to be all. Yesterday, I think I recollect the government saying has already been issued to take care of the negatives, in quotes, of the assets and liabilities of these 5 banks. So the bad parts that the Consolidated Bank Ghana shouldn't put on its balance sheet as a new bank now starting. Somebody's going to take care of that.
Let's talk about these bad parts. Let's talk about exactly what these banks did to bring them to this position.
Okay, so let me take it exactly from the press release.
Right.
So let me use, for example, let's start with Unibank, and it's a lot of information. So I'm going to just pick the salient points.
Right.
Now, it says in the case of Unibank and Royal Bank were identified during the AQR update, and AQR is the Asset Quality Review. Bank of Ghana in 2016 conducted this, and essentially it tests how banks will react if all your assets, and by assets I mean your loans, your investments, go bad. So it's your capital, and now you know there's this whole 400 million debate.
That's right.
How is your capital going to offset these losses? That's if these your loans and things go bad. And it was found in this AQR in 2016 that the banks were severely undercapitalized, and it's very simple. When these assets go bad, you're supposed to use your capital to absorb the losses. And if these assets are way beyond your capital, at that time the capital was 120 million. It is still 120 million. They have up to December 2018 to
move
meet
it to
this
400.
Yeah, so the Bank of Ghana says, look, Unibank at that time was severely undercapitalized, and it says its capital adequacy ratio. Again, what does capital adequacy ratio mean? Its capital, like I said, is going to use to defray its bad assets, its bad loans, or loans fall under assets. So capital adequacy ratio means you should have enough capital on hand to absorb the losses of your risk-weighted assets. Very technical, but simple. Your loans that are very risky. So Unibank, at the time when the announcement came, didn't have enough to do this.
Right.
Okay. Then it says it boxed Unibank and Royal Bank together, and it says the two banks subsequently submitted capital restoration plans to the Bank of Ghana. These plans, however, yielded no success in returning the bank to solvency and compliance with prudential requirements. So essentially, at that time, Unibank had problems. Bank of Ghana says, come and give us a plan. Tell us how you're going to look for fresh capital to inject into your business so that if things go bad, you have this capital to fall back on. And Unibank couldn't do that.
And this is just part of what they did wrong.
Exactly.
We'll be learning more about what Unibank failed to do or did wrong, leading them to this point, and of course the four other banks as well. But before that, Roland Walker is standing by to speak with Dr. Saint Kutu. Now, he's a lecturer in finance and risk management at the University of Ghana Business School, Legon. Insights galore in this conversation. Roland. If you can hear me, Roland, we can't wait to get into the conversation. Good morning. Right, we're working to secure that link, but as you can see, Roland is ready to go. He is with Dr. Saint Kutu of the University of Ghana Business School in Legon. Roland, I hope you can hear me.
Good morning to you, Kojo. How are you?
Not bad at all. Can't wait to hear what the good doctor has to share with us. I believe we may have a bit of a delay.
Well, I can hear you clearly, Kojo.
Right, yes, there appears to be quite a delay of perhaps up to a minute. But eventually, Roland will hear what I said about a minute ago.
And we all know that once you're consolidated in the studio, it means that everything is now well off. The financials are also good. No wonder you look so good this morning, Kojo.
Well, we're going to hand over to Roland now. I think as soon as he hears what I said a while back, he will get started with the conversation. Of a delay there, we will sort it out, and eventually Roland will bring you that conversation with Dr. Saint Kutu. Now, he lectures in finance and risk management at the University of Ghana Business School. So he's perfectly positioned to help us understand some of the implications of what has happened. Of course, in the studio we have Norvan and Philip from the business team who have been educating us on exactly what went wrong. Shall we go back to Unibank while we await that connection?
Sure. So it says the official, continuing from the press release by the Bank of Ghana, the official administrator appointed for Unibank in March 2018, and that's KPMG, the auditing firm, has found that the bank is beyond rehabilitation.
Wow, important point. I'm told we have Roland now. Let's go straight to him.
And we know what the announcement has been from the Bank of Ghana. Yeah. When you first heard it, What did you make of it?
Well, I wasn't surprised because in 2006, when they did the asset quality review, 9 banks were undercapitalized.
At the time?
At that time, 9 banks were undercapitalized. And 7 has gone bust, so 2 more to go. But I believe that those 2, they would have propped up their capital base by now. So I wasn't surprised at all. Yeah.
But, you know, from 2006, we've moved on. We've had some resurgence in the economy, growth in various sectors, etc. But the question has to be asked. If the banks are this way, we have to ask the question, how important then are the banks for which the regulator, the Bank of Ghana, even government should even be perhaps concerned and even more interested in how it operates?
You know, by law, the Bank of Ghana is supposed to maintain the safety and the soundness of the financial system, and also to protect the interests of the depositors. I mean, we can make the argument back and forth as to why the government has stepped in, create a new bank, and also using taxpayers' money to support the banks. It's an argument we can make. But the overriding principle argument is that the government must maintain the soundness of the financial system. There are a lot of research that has been done here by my colleagues at the business school that shows that a high correlation between the growth of the banking sector and then the economic growth, specifically growth in credit.
In what ways?
When the banking sector give out credit, the argument or the assumption is that it's going to increase investments because people will borrow, invest, create jobs, pay their taxes, economic growth will increase. Because that's the economic argument. And that's why there's a high correlation between the banking sector, the sound of the banking sector, and then the economic growth. The government or the Bank of Ghana cannot sit by to allow the banking sector to fail. Because when it fails, it will have a cascading effect on the economy.
But somebody will ask, well, I have a bank. I've come to you for some level of regulation, which will mean that I need to meet certain benchmarks or criteria, whether I have enough in the kitty, and then also I have the right structures to be able to withstand all the pressures in the system and call myself a bank. That's how come you give me a license.
Exactly.
That's what the Bank of Ghana should be doing.
Well, let me walk back a little. In 2000s, government introduced policies that caused the entry of new banks. The assumption was that it would increase competition and innovation. But fast forward to 2012, there was serious economic headwinds. Our fiscal balances were low. Balance of the current account was also low. There was high volatility in terms of our currency. And then the banking sector also was exposed to the energy sector. It caused most of the assets to be illiquid. And even IMF warned about the ominous problem in the banking sector. And the Bank of Ghana also admitted yesterday that there were irregularities in the issue of licenses. So Bank of Ghana should also be blamed to some extent because they did their homework well in the issuance of licenses. So if somebody comes to you with money, you want to set up a bank, there are a lot of things that must be taken into consideration. Bank of Ghana doing their job, and also whether the people really have the adequate capital to support their banking operations.
And my colleague in the studio, Kojanson, asked a question this morning. I mean, we're not on air there.
Exactly.
Was asking somebody should be responsible. If not that somebody, maybe an office or supervises an office that is supposed to make sure that the capital adequacy, the assets are also in good standing, etc. After the review.
Exactly.
Why would such entities or such bodies or an office or a person who's supposed to be responsible do that, and then we'll have these failures?
Because elsewhere, I believe heads must rule. Those who are responsible for the supervision of the banks and those who are responsible for granting the licenses, heads must rule. Because if at the end of the month they draw their salary and they have to do a good job, because what they did, it has exposed the whole economy to systemic shock from the banking sector. Had it not been these actions taken by the BOG, it would have been disastrous. Because imagine some of these banks, they fail. There will be a bank run. And most of us will lose interest in the bank, or lose interest or even faith in the banking sector. So I think heads must rule. Those who are responsible for these quagmire, they should be fired from the BOG.
It means that, well, those people may know that these are the things that were ongoing or not.
Exactly.
But it also means that the banks were supposed to have acted well. Now, let's look at what has been pertaining. For example, you look at the first two, UT and Capital,
exactly.
We've had a system, even outside the banking system, even we have people who are heads of the boards of banks or specialized institutions, not having perhaps any specialization or expertise, etc., on the boards, etc. And then we've seen that if you look at what the Bank of Ghana has been saying since Capital and UT, that we have people who sit on board who are supposed to drive strategy and don't have expertise. Not that they are not qualified in their own fields. What should usually be the standard?
Okay, Bank of Ghana have introduced the fit and proper paper, where people who are supposed to sit on board, they must be certified. So I believe that going forward, they have to liaise with the Institute of Board of Directors to come up with a certification program that all those people who sit on the boards of banks, they must be certified. They must be taken through a rigorous program to understand the risks, and to understand the corporate governance issues, so that when they go out there, they'll be able to protect the interests of depositors. Because if you look at the numbers out there, Unibank, for instance, the loans that were taken by people who are related to the bank, there are also people, members of the board, it was about 75%. That's outrageous. So I believe going forward, we should focus purely on merit. Political expediency should be thrown out of the window, so that people should be appointed on board based on merit, and those people should also be certified.
Okay, just for the layperson out there, I have a chunk of money, let's say a bucket. It can establish a bank, or can be part of the larger chunk to establish a bank. And I have my money seated there. I need money. What do I do if my bank is sitting, for which maybe I'm a shareholder or I'm the sole shareholder, if there's anything of the sort?
Well, if you're a shareholder, it doesn't mean that, or it doesn't give you the blank check to borrow or to take money from the bank. Because the financial institution or the bank in which you sit, you are more or less sitting on it on a fiduciary duties basis. So you cannot go out there and start taking money from the bank's kitty. You have to protect the interests of depositors. And as much as you are a shareholder, yours is to make sure that there is high return on your investment, but not go after the deposits or even the money sitting in the vault of the bank to undertake any or other activities that you think it's best for you. No, that's not the way to go.
I see.
Exactly.
But then yesterday I was cutting through some of the pages I'm on, and one question that just came up and said that you're borrowing 5-point-something billion. Why don't you give each of the banks those bailouts in the form that they needed to meet capitalization, also meet the liabilities they may have had, restructure them, and then they stand as the individual entity instead of consolidating them into one?
Exactly. Elsewhere, we would have said that bailouts, that governments will recoup their investment in terms of bailout. But Ghana asks whether the amount of money the government is putting into this bank, whether they're going to recoup it. That's another issue. So the jury is out there. But I made mention of the fact that the overriding principle is to maintain the soundness of the banking system. If it means government taking the taxpayers' money to support the bank, they must do it.
Okay.
They must do it. So consolidating all these banks, I think, is the best way to go, because all the good assets are lumped together and then placed under the Consolidated Bank. The toxic ones, I think they'll be given to KPMG to recover. I think that is the best way to go.
Right. Now we can learn from some of the best practice. During the banking crisis, and I'll quote the former president of the United States of America, Obama. He says that America wants to ensure that the institutions protect the people who not only have deposits in their vaults, but also have sound investments. Should that be the duty of government?
Yeah.
And why should it be?
Because we don't have a deposit insurance. Ideally, there should be. I think Bank of Ghana is gradually rolling out that measure where depositors will be insured. Their deposits will be insured. So in the event of any financial crisis, they'll be able to recover something. But the government must always protect the interests of the depositors. So it is incumbent on the government to make sure that people who put their money in the bank doesn't lose it. That one, it's an inalienable right of the government. So the argument Obama made, it's relevant in Ghana, because the government must always protect the interests of the person. Because it was a failure on the part of government to issue licenses to those banks, and also it was a failure on the part of government not to call them earlier for them to address all the issues that they saw. But for some reason, they allowed the issues to fester, and now they have to take the unpleasant measure of lumping them together, creating a new bank.
Well, it's a universal one.
Exactly.
But also we learn from all the best practices. And so we may be learning from the US and other bubbles that may have been experienced around the world. We put 5 point something billion. Government, I mean, is going to have that seated on Ghana's debt books. That's the whole point, right? But who pays for it?
It's the taxpayers, because this is public money. And I think the best way to go, gradually, government must reduce its share in a new bank to be a minority shareholder, and then allow the private sector to be a majority, so that it to be manageable. And then maybe in the near future, they'll return some good investment to the government. There should be some return on those investments to the government. But for now, government is a majority shareholder. GCB, of course, recently has been doing well. NIB, that's another issue. So looking at these two, going forward, the Ghana Consolidated, the Consolidated Bank of Ghana Limited, the question is it a good investment for government to put all those money? And even government is even ready to support some of the private banks if they show that they are able to raise money from the private sources. So these are some of the arguments or some of the issues that we are trying to wrap our minds around. But hey, it's about maintaining the soundness of the financial system. If it means government using everything to support, they must support. Because if the banking sector collapses, the risk will be too high. It will be too high. And it will take so many years for us to recover.
How can we recover that? 5 point something billion.
5 point something billion.
Even if, let's say, it's normally amortized, it should be a normal transaction. You do that amortization. Within what period do you think that we can have the banks coming to government to say that we're breaking even, and from this year or a decade we can start doing something?
Looking at the banking space currently, you notice that the operational cost is very high. Cost of funds is also very high. So it affects everything, including the interest that they charge on the loans. So if they're able to reduce operational costs, they're able to run the new bank efficiently, and also some of the corporate governance issues that emerge are addressed, then I believe that in the next 5 to 10 years, they should be able to return something substantial to government.
Well, for any entity that wants to start afresh, or perhaps you want to consolidate, I mean, forget about the name Consolidated Bank Ghana Limited, you have to start on a clean slate. You want to go lean, reduce overheads, do rationalization. Rationalization means that you're going to do a staff audit, or perhaps a personnel audit or resource audits. You're going to multi-tax people or departments, institutions, etc. It also means that people are going to lose their jobs. Livelihoods are on the line. What's the reality?
Let's take a cue from GCB taking over UT and then Capital Bank. They have to do a staff audit, because there might be some people who are redundant, people who are not putting up their best. They have to be let go. Because if you want to be productive, or you want to be efficient, or to return something on the investment, then you have to make sure that you cut out waste. And that includes, unfortunately, some of the staff. So clearly, some people will lose their job. It's unfortunate, but it is necessary, given that government is using public money even to support this bank. So it's something that has to be done in order to promote efficiency and also return those banks to profitability. Yeah.
For government?
Exactly.
Or for those who tend to monitor the political space?
No, for government. Because government is the one putting all those monies into the... So any time there is consolidation, there is always some staff audit.
Right.
Yeah.
So for those who are monitoring the political space, the economic space, etc., what would they say about these decisions taken? Were they political decisions, or pertinent or important economic decisions that needed to be made?
We from academia, we believe that it is very important. Because if you look at the action BOG has taken, it's devoid of any political polarization. they are more focused on the stability of the financial system. And I think in as much as it's a difficult pill to swallow, I believe it's the best way to go. It is the best way to go. Given that even Ghana, the banks are many compared to other countries in Africa. Because in Nigeria and South Africa, the banks are not as much as we have here in Ghana. Even our population is lesser than those two countries. So consolidation is the way to go. And BOG, I think it has descended and descended heavily. And you and I will still have trust in the banking system. This morning, people are not running to the banks to withdraw their money because they believe that BOG, the action they've taken, is the best way to go. Yeah.
Okay. In order for us to move forward, not to stifle initiative, not to stifle people's interests, not to stifle investment, would this in any way discourage maybe other entities who want to invest in the banking sector, commercial banking sector?
I don't think so. It would rather encourage people to invest, knowing very well that Bank of Ghana will not sit there for their investment to go waste. So it's something that people will have trust in and also be willing to invest. And I think the regulator too must also sit up. Good, they have identified some of the shortcomings in their side. They must, going forward, they must try to be robust in the application of those rules, those procedures, and those policies, so that they don't allow banks to use fictitious means to acquire licenses. And when things are going bad, they don't turn the eye to the left or to the right, but they must focus on what is being done and also take remedial measures. If it means sanctions, they must take those, institute those sanctions, and then make sure that those banks return to profitability.
So important steps taken by government and the Bank of Ghana. Exactly. But at the end of the day, if you take a casual look at maybe what the reports are, you get to find that many of the transactions, especially the NPLs, government seems to have a hand or seems to be a corporate to many of them as well. In what way should we be operating in which we're going to have that fluidity? Of course, you can take money from the banks, but then the servicing should be prompt or apt.
I think
what should be the lessons?
I think the banks must also reduce their exposure to the government sector debt. They must reduce, because take the energy sector. It was so high, now it has reduced. But I know that going forward, this cycle will repeat, where they give money to government and quasi-government institutions, and the money is not coming back. They must reduce and focus more on the private sector. They should focus more on the private sector. And I think the banks too are lazy because they are more concerned about default rates, because the government will not default in whichever way to not default. So they are more concerned or comfortable giving money to the government than giving it to the private sector. But I think with the address system and also the measures the government is putting in place, it will address the default rates, and then they should also focus on the private sector. Yeah.
You have your address?
Well, I have.
What's your address? but let's move on. Let's get to the point where we now have to talk about the fiscals, because as far as we're concerned, they want to expose themselves to government transactions because they feel that they have that certainty, that assurance, the payment would always be there. Government is an institution, is a continuum and all that. But before we get to that level of interaction or exposure, government would have been doing poorly. And so it means that its instrument and the returns would have been high, and so it serves as an incentive. How do we make sure that we reduce that sort of exposure for the banks in that sphere?
It's incumbent on the banks to change their lending behavior, because there is this argument that government will not default. That's the argument. But the banks themselves should change their lending behavior, and it's all points to the wider picture that the managers of the economy should manage the economy well, so that the economic fundamentals will reduce. The banks will not be highly exposed in terms of the exchange rate and the exchange rates, and also some of the economic indicators. At least it should come down, so that the bank's operational costs will be low.
Yeah. All right. So again, you take the release. The Bank of Ghana says that all deposits of the 5 banks are safe, and of course they've been transferred to the Bank of Ghana. And the Bank of Ghana says that its asset quality review of banks conducted is indicating that since 2015, 2016, the levels and the way they've been doing have not been good. And then they mention weak corporate governance practices. Now we've talked about the issues about the financing, etc. Let's talk about the corporate governance practices. What are they? What should they be?
You know, we have a system where we have owner director, owner CEO, and there is also the merging of board of directors and then management. So there are some related party transactions which was not above board, and sometimes it was rubber stamped by the board. And these are the corporate governance issues
because they have interest.
Exactly, and also because they are more or less part of the system. So they are able to convince the other members to approve some of the facilities, which ideally should not be approved because there are limits as to related party transactions. But they breach the limit consistently. Take Unibank, for instance. They breach it consistently. So going forward, government or BOG must be robust as to those who will be sitting on the board. And then, thank God they've come out with measures as to how long a CEO should be a managing director. I think it's 4 years plus 2, that's 6. That's the way to go, because we have people who have been CEO manager for so long, and when you sit at one place for so long, you become complacent, and sometimes you throw some of the rules and regulations out of the window, and you bend them at will. So I think going forward, members of or people who sit on the board should be certified. They have to go to rigorous educational program, and also term limits, as BOG has come up with. I mean, it's the right way to go. It's very relevant.
Okay, and before we go, which are some of the best jurisdictions that we can learn from as far as this kind of relationship is? Having a shareholder, an owner who will not have an influence on the business.
I think we can look at US, even in Africa, we can look at South Africa. There should be a clear line between owner, board of directors, and also management. We have to look at just people who are closer to us, and then also take all the good things, implement them, and then try to maintain the robustness of the financial system.
Yeah. Well, thank you very much. We've been grateful for your conversation this morning. That's been good. Kwejo, so we have to come back to you in the studio. We've been speaking to Dr. Saint Kutu, a risk management and finance lecturer with the University of Ghana Business School. It's been a great conversation. I know that you also continue the conversation in the studio, but on many of the platforms, it will still continue. Please make sure that you get interactive. Facebook, JoyNews on TV is our regular page, and we also have a Twitter handle at JoyNews on TV, but let us know what you think on all those platforms. WhatsApp is also available, but it's back to you in the studio, Kujo.
Thank you ever so much, Roland and Dr. Kutu. Very insightful discussion there. And I think you've left it off at a perfect point for us to get back into chewing up these details and, what's the word? Ingesting them a little bit for our audience before they take up the bite-sized chunks. But the reality here is this. People made decisions that led to where we are today.
Sure.
We started to learn from Philip what those decisions were, what the actions were of these banks, starting with Unibank. Let's just very quickly touch on each bank and what they did wrong.
Okay, in the case of Royal Bank, according to the statement that was released, it says that an on-site examination conducted by the Bank of Ghana on 31st March 2018 revealed a number of irregularities. 8 non-performing loans constitute 78.8% of total loans granted, owing to poor credit risk and liquidity risk management controls.
So to break this down, they lent money to people without doing proper checks.
A lot of due diligence, ensuring that, these people could even pay back these monies that were given them. Sure. In fact, some of the projects that the guys who came in for these loans claimed they were going to do, probably, were not even viable projects. And as a banker, I keep saying that banking is not child's play. You don't lend people's deposits when you don't know exactly what the person is going to use it for and what returns can come on it. And so it's very critical that as a bank, when you have to lend money, there's a checklist that you must go through. And if you're able to go through all that, assess the business or the individual very well, and you're sure that this or these monies can be repaid with the interest that you're looking for, why not?
And that's 78%?
Yeah, and so of their loans.
And
so
non-performing, so they are not being paid back.
Of course. I mean, and this all gets to do with the capital that you have. You locked all of them into loans. These loans, you're unable to, recover them. And if you're unable to recover, that is a big issue.
We'll connect that to other things they did in a moment, but continue.
Now, we go to Sovereign Bank. And in Sovereign Bank's case, this is one of the points that the Bank of Ghana made. He said the bank is insolvent and unable to meet daily liquidity obligations falling due. Liquidity support granted to this bank amounts to 21 million as of July 31st, 2018. And they are one of the banks that they say got their license under false pretense.
Wow.
You understand? That is Sovereign Bank.
So they lied to Bank of Ghana to get their
They didn't even have
license.
the capital. I mean, the issue of capitalization. So you were coming in, the capital was probably, it was actually at 120 million, and you didn't have that 120 million that you claim you have. Investigations of Bank of Ghana have shown that. Now let's go to Beige Bank and Construction Bank. They were each granted provisional license in 2016 and launched in 2017. Subsequent investigations conducted by the Bank of Ghana revealed that, similar to the case of Sovereign Bank, both banks obtained their banking licenses under false pretense through the use of suspicious and non-existent capital, which has resulted in a situation where their reported capital is inaccessible to them for their operations. So in the face of it, the books, the documents they presented, they claimed we have the 120 million.
This is Construction Bank.
This is Construction and Beige boxed together.
Right. Can we have a quick look at the people behind these two banks, Construction Bank and Beige Bank? Let's look at the people behind these decisions that have led to this situation. So this is Construction Bank, I believe.
Yes.
We can name them quickly, and then if you know anything about any of these board members, you can educate us. Dr. Asari Akufo is the chairman.
Yes, is the chairman of the board, and then Stephen Poggi is the chief executive or the managing director. Now, Dr. Asari Akufo used to be the managing director for HFC Bank, now Republic Bank.
That is interesting. We'll get to that in a moment. I just want to go through the names quickly. Richard Yao Ado is a board member.
Yes.
So is, let's scroll up for the other names, please. Let's see who else we have. Major General Kwame Opokwe Dusey, Kwesi Amponsa Tewia, Sally Amoa, and then two more. Let's see the names, please. Vivian Lamte and Kwesi Edu Mante. Now let's scroll back up to the top because you were educating us on the board chairman, Dr. Asari Akufo.
Yeah, Dr. Asari Akufo, I mean, some would say an astute banker. I mean, many years with HFC Bank as the managing director and a shareholder of the bank as well. And then we know of what happened when the Republic Bank guys came in from Trinidad and Tobago, got shares from the bank, grew their shares until they got the 40%, which the law allows them to
do a takeover.
To do a takeover. And then they went through the processes. They got the support from SIC and I think SNIT as well. SNIT actually.
Yeah.
They got the support from SNIT, and then they were able to take over the bank. So currently, that is what the bank that has been rebranded. Stephen Poggi, who is the managing director, interested.
CEO, yeah.
CEO, managing director, CEO. That's what I see written. I sometimes get surprised when they,
add the two.
add the two,
I don't know
and,
what,
and I'm wondering, chief executive, managing director, what's that supposed to mean? Maybe I can be educated on that. But who is Stephen Poggi? Stephen Poggi was the managing director for ADB.
Yes.
And if our viewers will recall, this is the man that was let go by ADB when ADB was supposed to have been sold. Shares were supposed to be sold for it to recapitalize. Later they had to go on the stock exchange. It was a lot of trouble in this country. We know where the UNICOF, which is the union in the bank, the workers were not happy with it. You had people, minority, a majority, then minority, which is now the majority, even themselves. There were a lot of issues, that came up surrounding Stephen Poggi's management style and, the things that went on I remember the Bank of Ghana, conducted some audit on the bank at the time when Stephen Poggi was there. As to the fine details of it, they didn't release it for us to see. But before we could say Jack, the bank board and the government at the time decided that, okay, Stephen Poggi could go. Then he finds himself with this particular bank. Quite interesting.
Yes, Construction Bank, which now no longer exists.
Yes.
Right, let's quickly have a look at Beige Bank. Now, Beige Bank received their license in 2015. Well, they received their license in 2016 and started operating in 2017.
Yep.
Their board looks like this. Kofi Otutu Edulabi is the board chairman. Mike Nyineku is the CEO. Richard Edupoku is a board member. So is Theophilus Adomakon. Not forgetting Yao Ofurieje, Wilson Kwotete, Dr. Elsie Efa Kaufman, who we all know from the Science and Maths quiz, and George Apiakwabing, who is the board secretary. Okay. Again, quickly, who do we know on this, and what do we know about them?
I think that just as you mentioned, Dr. Elsie is on the board, and Mike Nyineku himself. I mean, this is the man who started this business from the scratch.
Yeah.
I mean, you will say he's the face of the business. When he's not there, it's like you don't see what Beige is. And a lot of the questions people have raised is, if you were playing in a different space, what was the point and the rush in getting to the banking space, commercial banking space?
That's always the aspiration, isn't it?
But you could do it gradually, ensure that you take your time. And for the fact that the central bank says that you showed documents and got your license, but unfortunately, the hard cash, which is the money you need, is non-existent or is not available. That is where the problem is, with this particular one. And the question I have raised several times is, what was happening at the banking supervisory department of the Bank of Ghana? Were the guys sleeping? What was going on? Why did they issue these licenses if the people did not have the money?
Now, it's an important question you ask, because now, as a result of all of this, the government of Ghana is now going to have to issue a bond.
Sure, a bond which we are told has been already issued.
Oh, I see. They've already done it.
They've already issued it.
That's interesting. So they've already got parliamentary approval and gone ahead with this.
I'm sure one of the bonds,
our knowledge.
One of the bonds that were issued, part of the money is being, used to deal with these things.
That is interesting.
Yeah.
Should that not have been disclosed to Parliament? Should the people of Ghana not have been a part of the decision making on this?
You never know. I mean,
because what's happening here is
the fine details of it.
Yes, what's happening here is private individuals have done certain things, and as a result of the things they have done, which they did to enrich themselves, we as a nation now have to go and borrow money, 5.7 billion cedis of it, which myself and my children will be paying back for many years to come. Should we not be part of the decision making on this? I'm surprised to hear that Parliament has already granted this. So my MP who represents me voted for this to happen on my behalf without me ever knowing that such a thing was being considered.
Remember that the government always goes to Parliament with their issuance calendar. And when that is approved, the Bank of Ghana
simply
has a calendar as to, okay, we'll be raising this at this time, we'll be raising this at this time. So quarter, half yearly, they have these things that they put
and they
down.
don't have to give reasons for why they will be raising.
Normally the fine details, I'm sure the Parliamentary Finance Committee would deal with all those things, and they would have agreed.
So someone in Parliament had the details, knew that this was being done to not to bail out, but to create a new bank and absorb the toxic assets of 5 banks that were to be closed down.
But Kwadwo, I mean, members of Parliament on the Finance Committee, people within the industry, players, have always known that we'll get to this point.
Wow.
Especially after the World Bank or so conducted, some kind of, audit on banks in this country way back. And so we knew that we'll get to this
This is where we were going. All right, let's talk quickly about Sovereign Bank. Now, in the case of Sovereign Bank, Dr. Addison said that the Bank of Ghana found that there was no reasonable prospect of a return to viability after extended periods of regulatory breaches, exposure to central bank liquidity support, and inability to publish audited accounts. So you see, here is an example of consistent breach of regulation over and over and over and over again. At what point should the Bank of Ghana have said, this bank is putting its customers' deposits in jeopardy by not meeting their regulatory obligations? We need to step in before that goes bad. I wonder, could this action not have been, especially in the case of Sovereign Bank, could this action not have been taken earlier?
Well, Kojo, from where I sit, I think the Bank of Ghana, at any point in time that, you know, these issues are put on the table, would look at the various scenarios, even if we have to support. And you remember that we're told that they are giving them even support up to the tune of 21 million.
That's right.
You understand? And I think they just felt that, look, we can't do it again. You get it. It's time to, you know, just step in and do what we have to do.
So let's look at the people who were breaching these banking regulations over and over again. The board chairman is, it's someone I know, Dr. Kwame Achampong-Che. Dr. Tete Nete is the director. Mr. Abdullah Abukari is also a director and on the board. Let's see, 3 more directors here. Mr. John, 4 more. Mr. John Okwete Arthur, I think is the name. Okwesi Arthur, sorry, is a director. Mr. Afote Odatefiu and Mr. Johan Bender. We also have Mr. Abdul Hamid Idrisu, who is the deputy managing director, also on the board. It's interesting to see so many. 2 people from management on the board.
You know, some banks, you know, you rise to become a director, and so they normally will have the managing director or the finance person or a deputy managing director, you know, who is in charge of something, also sit on the board.
Let's go back to that. We were looking at Sovereign Bank, weren't we? Please, let's go back to that, because I wonder what we know about these individuals here. Novan?
Interestingly, you studied yourself, Dr. Che Achampong-Che is somebody that, you know, these are guys who've astute bankers. But one of the questions that people have asked many years is, do you really have to start a new bank at that level? You know, and I'm wondering that if you did not have the capital, it comes back again as to you, with all these, you know, guys with kind of rich, you know, knowledge and all that. What were they doing? What were they doing sitting on the board?
Is the also I believe board chairman or
You
executive chairman of Glyco.
Yes. You know, he's coming from the Glyco side as well, and so you were wondering what is actually going on. And Kojo, one of the things that, you know, when we're off air, we're discussing as who was actually in the head of the banking supervisory department of Bank of Ghana when these licenses
were granted.
So if you're looking at the years of 2014, 2015, 2016, you know, when these licenses were being issued
to the new banks,
to these new banks, Wampa, Dr. Wampa
was the
governor at the time. Okay. Now,
except for 2016.
Except for 2016,
where he had been replaced by
Saku.
Yes, that's right.
Nasir Saku, you know, who the young man who became probably the youngest guy to take over as the governor of the central bank. But there was a gentleman who was in charge of the microfinances or the MFIs department of the Bank of Ghana. And I say that it was under his watch that we saw the DKM saga, we saw the Jethro and all those microfinance, you know, going down.
Right.
Raymond Amanfo.
Yes. Oh, Raymond Amanfo.
Yes.
Who then became
the head of the banking supervisory department.
And it's under his tenure that these new banks were given
Some
licenses.
of them also got their licenses.
Under false pretenses.
Under false pretenses.
So he
together with all those who are working within the department, because you have the responsibility
over that team.
Over that team, to ensure that you go for these on-site and off-site checks that you're supposed to do.
So,
And you're asking yourself, what were they doing? And I think the central bank must also itself be blamed as far as this issue is concerned. And if you read the statement, there are certain, measures that the central bank governor talks about, haven't been taken.
we'll look at those measures in a minute. I'm very interested in that. But I want us to very quickly go to the ground and see how this is affecting you. Okay, Ebenezer Sabute of Joy Business has been going around some of the banks this morning. He joins us now over the phone. Ebenezer, good morning. Tell me, what are the scenes outside these 5 banks that have been affected by the governor's recent decision?
Hi, Kujo. If I can hear you correctly, the situation here, I'm currently at the head office of Royal Bank, which is here at Shiashi. And I can say that the staff are entering into the bank to do their normal work, but customers have not started coming in yet. And as we all know, bank service doesn't open early in the morning, so we can understand that. But it is expected to open at 1. Earlier, I was at the construction bank head office at the Octagon. And if you know that building very well, it houses about 5 banks, which 2 of these banks are affected, Sovereign Bank and the Construction Bank. At the Sovereign Bank, they put a notice there that the bank has been, given to receivership, meaning that it's no more under the management of Sovereign Bank, but a receiver is taking over. And then also they give the notice that the bank will be open for business at 1 p.m. Right from there, then I moved to the head office of Unibank at the World Trade Center. That place, when I first went to the ATM machine trying to see whether I can be able to transact some business. But there's an inscription on it. There was an inscription on it that the ATM was out of use. So quickly from there, I made some surveys, and then I moved straight to the beach. If you know Beach Bank very well, they have one of their offices or their branches at the East Legon area. There too, business is normal. The security men and the cleaners are going about their business. But as customers coming in, they have not started coming in yet. And here at the Royal Bank, the ATM is still out of use. It's also out of use, let me say. And I can see only the staff and some security men. About 5 minutes ago, a bus came here full of policemen, armed. And then I think they dropped about 2 of them. Yes, I can see 2 of them that has been dropped. And then they drove back. So that's the situation here. Customers have not started coming in yet.
Thank you for that. And I do know that Unibank sent a text message to their customers saying, "Dear valued customer, Ni Amano Dudu has been appointed as a receiver of Unibank Ghana Limited effective 1st August 2018. Your balances have been transferred to Consolidated Bank Ghana Limited. Per Bank of Ghana announcement, you are assured that your deposits are and will remain safe at your existing branches. Your branch will reopen from 1 p.m. On Thursday, the 2nd of August 2018. Thank you. And that message has also been sent to customers of Beige Bank. So we know that the plan is for customers to be able to get into the bank from 1 p.m. Are you expecting a run?
Of course, there are some people who don't really understand the issues will want to think that, look, my bank is non-existent, so before they will change the name and everything, let me go get my money. Yeah. But just as the governor of the central bank did indicate, your monies are safe because the purchase and assumption has taken place. The new bank is in charge. What is only happening is that they quickly will have to do a quick meetings with various managers. New instructions have to be issued. Things have to be put in place before they start operations. Whatever it is, the new bank would have a way of doing things, and quickly before the branches will have to open, there have to be instructions that has to go down to everybody who is within the banking space as far as these banks are concerned. And then they know the reporting structure and all those things. And so that is what is going on. Sometimes they need to also use the opportunity to check which assets and all those things that are available, and then they're able to open for business. You remember in the same case with Capital and UT, on that morning when the announcement came, they were closed until 1 o'clock, and then they opened for business, and then it went on.
The rebranding also started that same day.
That same day, of course.
Let's quickly end with this. This is going to be the first time in a very long time that the government has had complete 100% ownership of a bank here in Ghana. Let's talk about the advantages and disadvantages of that. There are some who are already foreseeing government doing a lot of business through this new bank. There's so much that they need to finance, isn't there? Sure. Do you anticipate that government business is going to quite unilaterally go through this bank, whose leadership will be fully appointed by government? In fact, in terms of good governance, is there some risk when we discuss what the Consolidated Bank will be looking like in the future?
Well, there is some little risk that you look at, because let's look at the Bank for Housing, all the banks that government used to manage. What's been the story? I mean, with these banks, we've not been very successful, you know, when government is in charge. We cannot tell for this new one, but it is fully owned 100% by government. They have appointed the directors, the board and everything, which means that the same way shareholders of these banks could, you know, get monies and it will not even go through the books if care is not taken. Because if government needs to do anything, they would want to go through. But remember that a lot of the banks today are not interested in the long-term, what will I say, in terms of lending process where, oh, we can lend to you for 5 years. They want quick money. So what they are doing is what? 1 year, 2 years, 3 years maximum. Nobody wants to go beyond 3 years.
Yeah.
But the government is looking at having this 1D, 1F. Remember, the senior minister did announce that government was going to take 50% of the interest on the loans that will be given to companies that will be involved in the 1D, 1F. That is the industrialization agenda that we're looking at. And so all these things will come to play. And there's some kind of level of risk there.
Indeed, and there's so much more for us to discuss on this matter in the coming days. Thank you so much, Novan. Always great to have you on the show. No doubt we're far more educated on this than we were half an hour ago.